Hi, everyone. I'm Ivan Bayuki, and welcome back to Wall Street Silver. Joining us today is Alasdair Macleod. He is the head of research at Gold Money. Thanks for joining us, sir.
That's my pleasure.
Yeah, absolutely. You said before, what happens to prices is basically the consequence of the debasement of the currency. So why is the mainstream media pushing the blame so hard on Putin?
Well, there are about three answers to that one question, I think. First of all, if I can tackle the subject of inflation, it was probably better described as the increase in the quantity of money, currency, and credit, which leads to the debasement of the currency. And I think if you think in terms of the currency's purchasing power going down rather than prices rising, then you've got the idea properly. But unfortunately, we think it's just rising prices. So much so that we've gone from the days when we understood that the thing that drove the general level of prices up was basically an increase in the quantity of circulating credit and currency, to a situation where we think that it's got nothing to do with it, and prices are rising because it's Russia or some nasty OPEC or whatever it might be, or supply chain disruption, and surely those will go away and then normality returns. No, I'm sorry, that's completely wrong. What's happened is they're debasing the currency, and it's that currency debasement which is reflected in higher prices.
We do seem to have a lot of central bankers right now making comments, and even Janet Yellen, she's no longer a central banker, but a Secretary of the Treasury. They just seem to be making these nonsensical predictions that inflation's going to just come back down to 2% just magically, and we just don't have to really make any big changes, and it's just going to happen. I mean, and she just is roundly criticized by everyone. Why do they make these statements? Is it just are they trying to talk the market into believing this?
Yeah, basically, yes. I mean, I think it's a combination of trying to talk the markets into it and trying very hard not to upset the markets, because the last thing they want is a situation which gets beyond their control. So they've got to be very careful what they say. I mean, if Janet Yellen came out and said, inflation is going to be around because we increase the quantity of money and that's what's driving it, oh, shock, horror. Can you imagine what would happen? So they don't speak in those terms at all. They speak in terms which they can sort of justify on a Keynesian basis, but actually it's so far removed from reality that it's completely meaningless.
Well, the Fed has just raised interest rates by 25 basis points, and we're right now, everyone's wondering how much are they going to raise rates? How much are they going to raise rates going forward? Is it going to be 7 times, 9 times? But I've heard, with what's going on in Russia, Ukraine, the markets have been, one day they're massively up, another day they're massively down. And we might be doing like a one and done now. They might just raise it one time just for credibility's sake, because they've promised they're raising rates, but then they might just sit back and reevaluate. I don't know. Do you have any thoughts on Fed strategy probably going forward?
Well, the Fed are not in control of this situation. I mean, let me put it this way. I can't remember what the January CPI inflation rate was. It's something like 9%, wasn't it? I mean, it was huge.
I think 7.2, but then the recent one was 7.8.
Yeah. Right, 7.8. Sorry. And so that's if we believe government figures. I mean, you're looking at 15 plus. Yeah. Now, with the 10-year Treasury yielding just over 2%, I mean, is this right? With 7 to 8% inflation, or possibly 15 if you believe an independent analyst, obviously the pricing is completely wrong. So the answer to your question is no. 25 basis points and done. Forget it. I mean, actually, the real rate should be sort of 7 or 8%, and maybe plus a margin over that. This market is very incorrectly priced. I mean, it really is. But another aspect of this is that the Russian situation has exacerbated commodity prices, and the commodity price inputs into industry are extremely important. I mean, we notice this with energy. I don't know about you, but here I'm on heating oil as my means of heating. About 2 months ago, I paid, I think it was something like 68 pence a litre. It's now 135 pence a litre in 2 months.
Wow.
So, this is, I mean, I've turned the heating down. I mean, you probably noticed I'm shivering, but.
Well, that's a key thing. There's a lot of people on fixed incomes, elderly people who just don't have the spare flexibility to adjust to massive inflationary, it's like we're reaching a point where people have to make decisions between eating and heat. I mean, some people are really in that stressful decision-making situation in life at this point.
Well, let me just take this on, because this, I mean, you're right to mention eating, because that's the next problem. Two things we should note. One is that Ukraine is the breadbasket of Europe, and an awful lot of wheat is also produced in that region by Russia, on the sort of steppes. So that's going to be not on the market, if you like, in the summer. Furthermore, on top of that, Ukraine and Russia are great producers of fertilizer. That's not going to be available, or at least it'll be damned expensive, which basically means that farmers will not be, particularly in some of the sort of poorer nations, they're not going to be able to afford the fertilizer to get the crop yields, if you like, that they would, that they'd be accustomed to do. So that's another problem. On top of that, there is a further problem, and that is that China, which is roughly 20% of the world's population, has cornered stocks of rice, corn, wheat, and soya. I mean, soya is the least they've got. I think they're about 30% of the world's stocks or something. But the point is that you've got 20% of the world's population has basically cornered the available stocks. So what we're going to see in the summer, I'm afraid, is severe hunger and starvation in many, many nations.
But yeah, China, in food reserves, the food reserves of corn, rice, and wheat, it's between 50 and 60% of global stocks right now that they have. It almost made me wonder, was China given a heads up a year ago that this is likely to happen? To take Ukraine off the market, and they've been preparing for it.
I think I've got something to add to that. I mean, I noticed that China's policy towards stocking commodities and raw materials changed radically very shortly after the Fed cut the Fed funds rate down to zero and instigated 120 billion a month of QE. Now, that was a signal to me anyway, that the Chinese understood the inflationary implications of that change in monetary policy. So they have been accumulating things ever since. And I think that the accumulation of grains is part of that, because, I mean, if you have just a sort of fundamental understanding of money, and these Chinese, I mean, okay, we may not like how they run things, but they got some pretty bright people in there. They will have worked this one out. And I think this is something that they were aware of. Now, what I think we would be mistaken in thinking is that Putin and President Xi, in their discussions, Putin, was told President Xi, "I'm going to walk into Ukraine, so you better stock up on."
It wasn't that blatant.
I don't think that's the case at all. I really don't. I think I would date it back to that March 2020 when US money printing began to really accelerate. To my mind, that is actually the important thing. So, our channel is, of course, Wall Street Silver, and you're a gold and silver expert. How should precious metals investors be looking at these things right now?
We had this big run up in the past couple of weeks where we were $10 away from a new all-time high in gold at one point. Silver was pushing well above 26, getting close to 27. I think it was 27.50 in the futures market and close to 27 in the spot market.
Yeah.
And then all of a sudden we just gave it all back. We gave back a big chunk of it in the past couple of days. How should precious metals investors be looking at this right now?
I think that what has happened is that there has probably been intervention by governments, and I think particularly the US government, maybe with a little bit of help from elsewhere, to try and calm down markets. I mean, we've known in the past that they intervene in the gold market. That, that is recorded history, and there are many, many instances of that. But I think particularly we've seen it in the energy markets, as well as maybe in the metals markets. And this, I think, is why WTI fell from a high of, what, $135 down to around about 93 yesterday. And it's a little bit better this morning. So to my mind, this is, there is this interest, if you like, from government to try and calm markets down. Now, where we are in this is that so far, Putin has not responded to Western measures to sanction all Russian bank payments and sanction various individuals. The problem Putin has is that even with a settlement, with a settlement, he can turn around and say to his people, the special operation has succeeded. Mm-hmm. But you've still got the problem that the West is not going to back down on sanctions against Russian payments. So he might respond. Now, he might take the view that actually the West is killing itself with these stupid sanctions, and he just stands back and just watches them get into a huge, great mess. That, I think, there's a logic in that strategy. On the other hand, he might come back in certain respects and make life very difficult for us. And I suspect that could be, he will turn around and say, well, because of the effect of the Ukrainian special operation on grain output, we're not going to permit grain exports from Russia. So, he could tighten up the thing there, and he could argue it on the basis that he's got to feed his people first. So that's one thing. I think he could maybe do something with some of the rarer metals, sort of platinum and some of the rare earths and so on and so forth, saying we're going to restrict these because we need them for ourselves. And the great thing about that is that the public have got no interest in precious metals. They understand oil and they think, my God, my heating oil's gone up. This is because of Putin. So, that I think is a different category, if you like, of geopolitical strategy than, say, rare earths, palladium, whatever. So there are things he can do to make things difficult for us. And I don't think the oil story is necessarily over either. Yeah. So, this idea, what we've had, so what I'm saying is that we have seen this, the initial ramp up in prices as everybody got caught short, and of course the hedge funds ran in and sort of said, sell dollar, buy gold, sell dollar, buy silver, whatever they were doing on the futures market. The problem with this, I think, is that having had that initial run up, and then I think that the authorities, if I can say that in the general sense without being specific, have tried to bring calm back into the markets. I think there comes a point, maybe in the next week or two, where we start seeing prices rise in a more orderly fashion, really driven by, and I come back to this, by all the money printing that's been going on over in recent years. So the idea that this is, the price of gold and silver have suddenly been really sort of hit and it's terrible and, you've got to bail out and all the rest of it, that's for idiots. It really is. The point is that silver has an enormous role to play in this world of environmental, whatever, because of, it is the best conductor in the world, bar none. We have seen what's happened to uranium. We have seen what's happened to lithium prices. Why hasn't it happened to silver? The answer is they're sitting on it. They're sitting on the price because the bullion banks are short and they can't afford to see the price go up.
Yeah.
And so it's not going to take very much to actually tip silver, I think, into the sort of squeeze which we saw very dramatically with nickel. I think that is, for the establishment, actually quite a significant danger. So,
but you think they just changed the rules? Will they change the rules on COMEX?
Well, yes, of course they will.
Hand?
Yeah, of course they will. I mean, I remember the Hunt brothers. I was a young stockbroker in those days, and I had a client. I had a client who was dealing in South African gold mines, and he was also writing options, selling options in the silver market. And he got wiped out. Fortunately, I didn't shoulder any losses, but my commodity dealer friends went out of business because silver moved more in one day than it had in the whole of the previous year. And that's the sort of situation which the establishment wants to avoid. I mean, they'll move heaven and earth to avoid it. So, I mean, does this mean that we should think that the establishment can continue to always control the situation? We should go and look at something else? Well, you could do that. As an investor, I think it's actually could be quite sensible. But if you are actually trying to get out of the fiat money system and hedge your total commitment to the fiat money system, then what you should do is you should have some physical gold and physical silver, because that is real money. And you don't buy it to invest, because by definition, an investor buys at one price in the hope of selling it at another price.
Understood.
What we're talking about is we buy it so that when fiat currency falls over, we have got something to spend. And that is really what the role of physical silver and physical gold should be in the monetary sense.
Well, on that note, sir, I want to thank you very much for joining us. This is your first time on our channel. We really appreciate it. And we'd love to have you back in the next 3 months or so as 2022 develops and get your take on circumstances.
I'd love to be asked back.
Thank you very much.